July 26, 2019. And my name is Alejandro Zambrano, Chief Market Strategist with ATFX. We're going to take a look at the markets as we should do at this time of the day. We're going to begin with the euro and that's it really. So euro, what's going on here? Well, the market is moved lower from this high here that we discussed yesterday. So the ECB unfortunately made a bit of a mess of it, serious mess across many different markets. So in their statement, they talk about cutting interest rates or potentially lowering them, which is really sort of a strong sign that they will definitely cut rates at the next meeting. And then they added sort of hints of quantitative easing, and they talk about the symmetric target around inflation. And so all of that, if they just had left that at the statement, I think Mario Draghi would have got what he wanted, which will be probably a lower euro, right? And getting people ready for a rate cut. But then he backtracked so much and was not very gloomy as he was saying, and suddenly the market spiked to the upside. Now, the market spiked all the way up to this level, which was acting as support before. It's now acting as resistance, and the market, could potentially head lower here. So, if you did short here, there's nothing wrong with booking a better profits here if you want to. And I will be neutral now. We need to take out the May low for this to really turn bearish. Now the trend in the short term is bearish, the below 12.31. But again, I would probably look to book profits here and then wait for a break to the downside. I don't think this is really going to, work out really good right now. I think it's just going to remain range bound. If we move along here, this is the GBP versus the USD, and here we still have the problems with Brexit. So here it makes much more sense to just remain bearish. We said look to sell at 24.91 with stops at 25.64, and it's working out rather okay. The market is trying to break below support here, and if it does, I think it'll revisit this level. And then we have the April 26, 2017 low, and then after that we have the March 2017 low. In the longer run, and if you look at it from a weekly perspective, you can clearly see here how we're still working with this pattern target, the inverse head and shoulders pattern. Dollar versus the Japanese yen. So took out that trend funding level within that little range now. So I wouldn't really do too much here. I don't think it makes too much sense. And I would just ignore this for now. That's what I would have done. Elsewhere, crude oil is just trading sideways, and it's really difficult to say what's going to happen here. And the triangle does predict and suggest tighter ranges, harder to trade, and sort of no trend really. That's what it's telling us until we have a breakout. So that's why, as soon as I realized that this was going to be the situation for crude oil prices, I just ignore them, and I think it's better to ignore them. There's no point trying to push a trade on here. I mean, you can always, I can just show you the 4 hour, and I can tell you something like, okay, you can put a low here, you can put that as support, and then you can put this as resistance, and then you can say, okay, if we take out the high, you'll probably test the upper end of the triangle, and if we take out the low, we can probably trade lower, because it has in the very, very short term here on the 4 hour a bit of a sideways pattern. But the problem here is that when you have a rectangle like that, it might just go up a little bit and then go down again. So it's not really where I would focus. Now, here's gold prices, and gold prices unfortunately slipped below their trend defining level, which was this level here. So you can see we had a double bottom, low here on July 18th, and then another low here on July 23rd. And I was stopped out yesterday. The market slipped below support, and the market is now back up again above support, but a bit of a sluggish market. I don't really foresee anything happening right now. It's really sort of summertime, not much happening. The Federal Reserve is anticipated to cut rates next week. Maybe that will, cause some sort of market movement here, but the market is trying to struggle to figure out what it wants to do. You have this low, so you have that uptrend. At the same time, you have that downtrend. So you could almost argue and say, well, look, we have a little rectangle in the short term here, right? And so between 1433.88 and 1399, then my guess is that we'll just continue to converge, and then eventually we'll probably trade upwards. That's what I think. But right now, right here, I want to be neutral. And even if we trade below this level, I'm not really sure we're going to trade much lower anyway. So I really want to be neutral here. German DAX, this one reaches buy zone. So, and you know, the market slid quite significantly, but remains above the trend defining level. So there's no change to the outlook here. S&P 500 as well, it slid to its buy zone, so it bounced from there. So it's looking rather good. So we have a few things: S&P, German DAX to reach the buy zone, and then I have Eurodollar, which reached a sell zone, which one can book profits on right now. And then we have GBPUSD, where you have also in your sell zone, and it's possible, of course, to book profits here right now. But what you're looking at here, probably maybe keep it for a few more days, I think, because we can probably trade lower. That's what I would have done here. And crude and in gold, of course, fortunately, we got stopped out of that one. Okay, let's see if you guys have any questions. Okay, so no questions, so that's all right. So we're gonna wrap things up. I hope you guys have a good weekend, and I hope to see you guys on Monday, same time here at 9:30 a.m. on investingcube.com and in the webinars section. Have a great day, and I'll see you guys on Monday. Bye-bye.